Well, it's my great pleasure to welcome Stephen Jones, the Minister for Financial Services. Last year I interviewed him. He was the opposition spokesperson, and this year he's now the Minister.
I removed one of the diminutives from my title. How about that?
Anyway, congratulations on your appointment, and thank you for joining us.
So good to be with you.
Given the economic conditions have changed in the last 12 months from a low interest rate, low inflation environment with rapidly rising house prices to ones with higher interest rates, high inflation and falling house prices, is the government contemplating any regulatory responses?
Look, whatever we do in the regulatory space won't be in response to any of the short-term economic shocks or changes. We're really important that we look through the short term and look to the medium and long term. Government is about regulating for the long term, not the short term. So the stuff we'll be doing, particularly in the credit space, won't be about any of the near-term things. To the extent that we're looking at those sort of stuff, it's about our overall economic management to ensure that we're not adding to the inflation burden that households are experiencing at the moment.
Does it mean a change of emphasis in terms of how you view the medium and long-term regulatory framework then, though?
Yeah, look, in most respects not, from a regulation and a credit regulation perspective. Most of the things that we've got in train, we had in train when interest rates were a lot closer to zero than they are at 1.85%, the headline rate anyway.
And likely to increase.
And likely to increase. And inflation was much closer to the Reserve Bank's comfort zone than it is today. So we've got a bunch of projects that are underway. The most important thing that we said before the election and we carry into government is that stability and certainty matters. And that means you do what you said you were going to do and you take the approach that you said you were going to take, and whilst you've got to respond to external shocks, any government does, if it ain't fixed, don't break it. If it ain't fixed, don't try and fix something that isn't broken, and just stick to those things that you said you were going to do.
Okay. But does the government have any expectations in terms of a regulator response to the changed economic conditions, which is how they administer the framework that's already in place?
Look, all of the regulators are leaning into this at the moment. So whether it's the Reserve Bank in the area of monetary policy, whether it's APRA looking at macroprudential policy, they are all leaning into this issue at the moment. It's important that monetary policy is done at arm's length from the government. We don't want to be in the business of setting interest rates. We've got an independent prudential regulator doing its piece as well. It's important that that is done at arm's length from the government. If there are things that we need to do from a fiscal, a budgetary, a regulatory point of view, then that'll be done in consultation with the regulators. Of course, we have set up a review of the Reserve Bank. So that was announced by the Treasurer a couple of weeks ago. Important job of work. It's been over a decade since that has occurred. So that'll dig into some of these monetary policy issues that you're perhaps alluding to. And in the area of credit, there's a few things that I identified in opposition that we want to drill down into. One is the buy now, pay later sector. But overall, we think stability and certainty in the regulatory setting is needed, and we want to see that all of those changes that were recommended, for example, by the Hayne Royal Commission, legislated, bedded down, and then we can move on and look forward.
Well, actually, that's a good segue into the next issue I wanted to raise with you. The previous government appeared to have concluded the regulatory changes it wanted to make responding to the Hayne Royal Commission without implementing completely all of the recommendations. Is that something that the new government is likely to revisit? And if so, which recommendations would you look at putting back on the agenda or legislating?
Well, I think the previous government dragged its feet on implementing the Hayne Royal Commission as they dragged their feet on the Royal Commission in the first place, resistant to the inquiry, resistant to implementing the recommendations of the inquiry, because by the end of things, they've basically given up on governing. There were two key recommendations that weren't implemented that should have been. I think one of them was introduced, in fact both of them were introduced into Parliament, but they were unable to manage the business of Parliament in time to get them through. We would have agreed on both of them.
And they were.
And we'll introduce legislation around the compensation scheme of last resort and the financial accountability regime, which extends the bear into other parts of the finance industry. So we'll do both of those things, largely in the format that was introduced by the former government, largely, so that there is certainty about all of this stuff moving forward. But I think it's important to consumers, but also industry at large, and the boards of banks and financial institutions, that they can say, all right, we've taken our medicine, we're not stepping backwards, we'll move forward on the basis of all of that being legislated. The rules of the game are known, let's move forward.
And one recommendation that I think the Labor opposition even introduced legislation on immediately following the Hayne Royal Commission that's never been made is the abolition of the point of sale exemption in relation to credit. Is that something that is on your agenda?
Look, it is something that we are talking to industry about, but it does sort of relate to that issue that I alluded to a moment ago around buy now, pay later. And it's important that if we're dealing with one part of the retail credit market, that is retail credit products that are operating within the retail space, and generally speaking the small credit amounts, then we need to look at all of it, not just one part of it.
So in the context of buy now, pay later, you will be looking at the government's position in relation to...
Well, it makes sense. It makes sense to look at all of these things as a job lot. If you don't want to be doing something that creates a market advantage or disadvantage to one credit product over another, which is essentially the argument we've had about buy now, pay later products. However they're marketed, however the contracts are designed, from a consumer point of view, they are a credit product and they should be regulated in a similar way to other commensurate credit products.
Well, you've also just nicely segued into my next topic, which is, are you able to outline the process and timetable for the regulation of the buy now, pay later or BNPL sector?
Yeah, sure. So, we made an announcement in July that this was our intent. Would have been a surprise to nobody in the sector, because I've been saying it for in excess of 12 months, that if we won government, that this is the approach that we would take. We'll do it in consultation with industry, and regulation will be fit for purpose, so commensurate with the risk involved. So within the next month or so, we should have a consult or an options paper. We're just working with Treasury at the moment to pull that together. So within the next month or so, we should have a consultation options paper to discuss with industry and stakeholders, consumer reps, the legal fraternity. I'm sure will be poring over it with great interest, and hopefully on the basis of that consultation. I haven't got a firm timeline yet, but I don't want to be sitting around at your next annual credit law conference discussing this very same issue and whether we're going to regulate or not.
So what you're thinking, regulations, say, introduce them up and running by the first half of next year?
Well, obviously it'll depend on the stuff that comes back through the consultation, but that seems to me to be a reasonable timeline. We will consult deeply and genuinely, but not endlessly, on this reform. And
what are the main respects in which you see consumers need to be protected by regulation in relation to the buy now, pay later sector?
Yeah, good question, Luke. If you look at those provisions in the Consumer Credit Act, the responsible lending obligations, on the face of it, they're a pretty low threshold to get over. A product must be affordable and appropriate to the person that it is being sold to or directed to. And from the government's point of view, that's a reasonable threshold, appropriate and affordable. We will talk to the sector about how that plays out and what regulatory guidance is needed, and what other aspects of the National Consumer Credit Act should be applied. But the principle I have in mind is how big's the risk, and therefore how much of the regulation of the Act should apply as is, and how much needs to be adopted for a more bespoke approach. The regulatory burden should be commensurate with the risk involved, and there's a low value products in the large.
Yeah, the sweet spot there, though, isn't it? To find some way in which you can regulate buy now, pay later in a way that's easy to implement from the perspective of the providers, not obtrusive and unduly obtrusive on consumers, doesn't adversely affect, for example, their credit risks if they're knocked back or if applications are made, and it's easy to implement. And that sweet spot, it strikes me, is actually quite a difficult thing to achieve.
Yeah, but I think we can. I think we can get there. And one of the advantages we have in doing this in 2022-23 that may not have been available to us when the Consumer Credit Act was introduced back in 2012, I think it was
2009.
2009. Yeah, you're right. It was. Just at the in the heart of the global financial crisis, wasn't it? So, one of the things that we have available to us today is that most of the companies that are offering these products are sophisticated IT fintech operators. They have very high IT utilisation and very high IT competence. So I'm confident that we can get the regulatory mix right and rely on and utilise the data and IT capacity of these companies, which after all is their strongest selling point.
I think certainly that's probably true of the market leaders in the area. It may not necessarily be as true of some of the smaller or later players in the area. I don't know, but that's my impression.
Yeah, look, you might be right, but here's the thing. Are we really saying that we're going to fix regulation which is only as tough or is only as good as the slowest and weakest beast in the herd?
No.
And I think the answer to that has to be no. We've got to say, what is the right standard here? And if you can meet that standard, you're in the game. And if your business model is such that you can never meet that standard, then maybe there's a deeper question you have to ask about whether you should be operating in this industry.
And so I suppose you've indicated fairly clearly that responsible lending has to be a part of the BNPL regulation. Are you able to indicate things that definitely won't be part of the BNPL regulation? For example, licensing. The BNPL providers going to have to be licensed?
I'm really reluctant to do the rule in, rule out, if you like, for this reason. And I could say yes, licensing, the credit providers, if they are credit providers, then they should have a license. And people might take the view that that means that every single licensee obligation under the existing National Credit and Consumer Credit Act would therefore have to apply to a licensee. And I've already said through my introductory comments that I don't believe that is the case. So it seems to me that some form of registration or licensing, there'd have to be some form of accreditation process. And I'd have thought industry would want that. Let's hear what they've got to say. But I'd have thought industry would want that. I'd have thought industry would want to say, well, here's our operating standards, here's how we do it. Can you give us a startup match accreditation so that we don't have to continually be wondering whether we're doing it correctly?
Okay.
And I think that would be in their interest and be in the regulator's interest.
And requirements, for example, those who've signed up to the code have any way
Correct.
to be part of an external dispute resolution scheme.
Yeah, and can I make this point? For the last 12 months, I've been saying we welcome the introduction of the voluntary code, and that's an obvious starting point for how you would regulate. You'd go to the code and you'd say, well, what have all the good operators in the industry already acknowledged that they should be doing as a bare minimum? And you'd take that and you'd look at where the gaps are, and if there were any gaps, then you'd legislate to fill those. You'd regulate it on the basis of that code, and that's a fairly orthodox way of regulating an emerging sector.
And, okay, can I give you an easier one to perhaps rule out? What about, there are very prescriptive contractual disclosure requirements that are very much geared to paying interest on loans under the NCC. Are you able to...
Can I get a lawyer to help me before I answer that question? Do you know anyone?
Yeah.
To be honest, I'm not sure. I don't know what I don't know.
No, maybe that's an unfair question.
No, it's a fair question. I think my response was equally fair. I want to get some advice on what should and shouldn't be in there. I'm not trying to duck the question. I'm just also not trying to stick my foot in at the opening of the session.
No, and just before we leave buy now, pay later responsible lending, I've heard all sorts of talk that that there's some suggestion that the government will be doing a wholesale review of the responsible lending provisions under the NCC.
Okay, let me put this to bed right now.
That's right.
So I actually think the responsible lending obligations, as I've just articulated them, are pretty right, and if there is a problem with their operation, two questions have to be asked. Is the regulated community doing everything reasonable to meet the obligations? And I think we've got to be frank, some of them were dragging their chains on the IT upgrade necessary to meet the tests. And, they've got on board over the decade and upgraded their systems, and there are a couple of lenders in the market are saying they can approve a loan within an hour now. So that means they've done a significant upgrade to their IT systems. Good. Okay, if they've met all their obligations and they're able to get a quick turnaround on a loan in a short period of time, good.
Let's remember the 4-minute mile.
Yeah, exactly. Let's remember they're doing it under the existing laws. But if there are problems with the regulatory guidance, let's look at the regulatory guidance to see that it's fit for purpose and that it is doing what Parliament intended it to do, and that is to ensure affordability and appropriateness in the offering of credit products. And if it's not delivering what Parliament intended to do, then the regulator can and should have a look at that.
Yeah, well, they haven't, for example, updated RG 209 in light of the Westpac appeal.
Yeah, so there's some things that we can have a chat with the regulator about. Obviously, they operate at arm's length, but from the government, they're an independent regulator. But I sort of repeat the point: if you've got lenders out there today saying they got their ducks in a row, so as they can now turn a home loan application around in a few hours, that seems to suggest that the regulatory burden isn't onerous.
And equally, from the other side, you're not looking at reversing the impact of the Westpac case that effectively makes insignificant the process lenders use to undertake responsible lending assessments.
I think the Fed Court got it right in Westpac. They basically a colourful and very quotable and rememberable dissertation on common sense that before you get your home loan, you might be having Wagyu and a glass of expensive Shiraz every night. When mortgage payments come in, you might sort of tighten your belt. That's an observation of the blindingly obvious. And the second thing that the court ticked off in Westpac case was the use of proxies and proxy indicators, or proxy measurements. And on both counts, I think that was a sensible statement on the sensible operation of the law.
And in fact, the proxy measures probably work even better in an inflationary regime when they increase as inflation increases.
Exactly. So I think in both cases, on both of the ratio of that decision, I think they got it right.
Okay, well let's change the scenery a little bit and talk about payment systems reform. The current.
Are we doing this thing last? Is this going to our last thing in the afternoon? Put people to bed with a discussion?
No. I think it's going early, and there's a discussion afterwards.
A hungry discussion.
I
find it fascinating. I hope you do.
No, I do too. And there's in fact a discussion I'm chairing with the industry associations immediately following.
Great.
So
I jest. It is a deeply engaging topic.
No, absolutely. So the current framework for regulation of payment systems is largely based around recommendations made by the Wallace Review that arose from that in the 1990s. And I always laugh that it had its key finding that the key driver of the new payments technology would be the smart card.
Yeah, hilarious.
Smart card. And it's a one size fits all regulation of payment products within the financial services provisions of the Corps Act. I mean, it goes without saying that industry and technology have moved light years away from that model. Is it fit for purpose? Does it need to be? Is the current regulatory regime fit for purpose? Does it need to be reviewed?
No, it's not, and yes, it does. Is the short answer to your question. Like, these things weren't even invented. This has been recorded on one of those devices that wasn't even invented when Wallace did his review. And if you ask anyone under the age of 30, they don't carry a wallet, and they do most of their commerce over their iPhone or on the internet.
I'm well over 30, I hate to admit, and I don't carry a wallet either.
Indeed. Well, you're very hip. And
my children wouldn't say that.
Yeah, neither do mine. Look, obviously the world's changed, and there's a merging of IT and finance. Two trends, like obviously mobile devices, the appification of everything, and mobile technology, and the merging of IT and finance is one trend, and the other one is intermediation. Like, Wallace probably couldn't have anticipated what's going on in the intermediation in the payment space. So it just, of course, we've got to review it. I think Scott Farrell did a very good job of both reviews he's done for the previous government. Talk about, here's a bloke, I know he doesn't work for your firm.
No, he's a competitor.
Yeah, but here's a bloke who's punched out 2 reviews and a PhD while being a partner of a top-tier law firm. It's not too bad. His senior associates would have been very busy, I assume.
I assume they didn't write his PhD.
But I think he did a good job. I think he did a very good job, and we are looking closly at all of the recommendations, the need for a roadmap, and we'll have more to say about that in the very near future.
And so, the previous government last December released its response to his payment systems review, and they came up with positions on certain issues. Is that response still valid?
We'll have our own response. Okay, new government, new response, fresh set of eyes, and fresh set of priorities. But like, for example, we at the top end of this discussion talked a bit about buy now, pay later. Farrell had a bit to say about emerging forms of credit and other arrangements, as have a bunch of others. So
there's a real issue of the definition of the payment system and the Payment Systems Regulation Act that would preclude regulation, as the Reserve Bank wants to do, of no surcharging in relation to buy now, pay later.
That's right. So there's a bunch of things we need to look at. So we may well have different priorities to what the former government was proposing to do. I'm not inside their mind, so I can't tell you, but I am inside ours, and I can tell you that we think a good job was done on it. we need to be regulating for the next century, not the last one. And that means looking more at function than form, looking at the finance industry being more than just ADIs, and looking at the whole range of emerging value products, value storage, money forms, and ensuring that we've got regulation fit for the future, not the past.
So that's really what you're saying is your priorities are looking at the system holistically, looking at payments holistically. I assume, without actually asking you to commit on any of this, that includes crypto, taking into account cryptocurrency and...
All of it, okay? But as the old cliche goes, how do you eat an elephant? Yeah, one bite at a time, so there'll be some things that we want to chunk off.
And are you able to share with us even what a main priority is, or what a key concern or key issue is that you'd be looking to bite off first?
Well, we'll do what we said we will do before the election. Okay, so for example, we've already made an announcement about what we're going to do in Buy Now, Pay Later.
Right.
But in the near future, you won't have to wait too long. In the near future, we'll have more to say about a more comprehensive response to FARL.
Okay. Okay, and then I suppose a couple more subjects. Data. What's the relationship between regulatory reforms in relation to data, such as comprehensive credit reporting, consumer data right, and consumer welfare and general financial services regulation? What are your main priorities? What's the new government's main priorities in that area?
On the subject of the CDR, I was pretty excited about it. There wasn't a lot of people who were too excited in Parliament about the consumer data right, but I was one of them. I think if you look at the advantages for consumers, you look at the capacity for new business models to emerge, it's all around data, understanding of it, data analytics, and the democratisation of data.
It may, in fact, you talked about intermediation earlier on in your general discussion. It may well, if organisations can take advantage of it, speed up the process of general intermediation. That is, an intermediary might actually be able to control the customer and access their data, pull their data from all sorts of areas, and be more influential. But on the other hand, I suppose you'd also get the issue of the large institutions who hold that data currently will fight that and try and put up their own competing offerings.
Yeah, there's no doubt about that. If I could put it like this, if some of the big brains of the international IT and finance world worked out a long time ago that data and access to data is king, and you can make a lot of money out of it. If Mark Zuckerberg gets it, then you should be sitting up and paying notice that there is value in this. And if the Australian government does nothing and don't try and democratise access and control and have a safe, secure system for accessing and utilising data in the interests of the consumers, then the one thing that you can be absolutely certain of, and that is that the national and international institutions that currently hold that data will be using it in their interests and not in the interests of the consumers. So we want to flip that. We want to ensure that consumers have access to their own data, and we want to ensure that we generate a new level of competition and a new level of innovation on the basis of data being available at the discretion and direction of consumers to help them live their lives better, and to help, whether it's in the area of healthcare, whether it's in the area of managing home finances, whether it's in the area of purchasing large lumpy goods or paying for services, a whole bunch of stuff that can be done through better use, utilisation, cross-referencing of data which is held from everywhere, from your bank to your credit card company, to your energy provider, your telco provider. Imagine combining all of those data sets up and being able to do some analytics across all of that stuff.
The organisations that get there first
will be the winner. And what we want to do is ensuring that the organisation called Australia is there first, and the organisation called Australia is setting rules in the interests of consumers. And if we do it right, we can be a leading economy which sets rules for the rest of the world, instead of being the jurisdiction which receives the rules, or being the only jurisdiction in the world which is, or one of the few jurisdictions in the world which is driving right-hand side vehicles when everybody else is producing products around left-hand side vehicles.
But it's a fabulous vision. What's the actual take-up of CDR in the banking sector now that it's been introduced and is compulsory for the major institutions at various degrees?
Yeah.
My impression is it hasn't had a huge take-up so far.
Yeah, very early days yet. I'll tell you a story. Like, my grandfather was an electrician, and I remember him in his days. He said when he first did his time as an apprentice, he couldn't work out why you needed a house with more than 3 power points in it. One for the standard lamp, one for the radio, or the wireless as they used to call them, and one for the ice machine and the fridge. Like, you know, there's more than 3 power points on every wall in every house in the country, and I think we're at the same stage. We're at the 3 power points per house stage of consumer data rollout. The take-up will be slow, but once the first person or the first group of entrepreneurs develop that killer app or that killer business model, which enables people to get significant savings in their household costs, a lot of things will follow. And I tell you who'll be first into the market: the mortgage brokers. They'll be the first into the market because there are huge benefits for consumers and brokers alike.
And it's the issue, and I think the critical factor is the disgorgement, the requirement to, the obligation to require large organisations to disgorge information about their customers to properly accredited intermediaries who act for those customers. That's the critical part of it.
That is the critical part, getting the rails right. But here's the other thing, and take note, all the focus and attention at the moment has been around the burden of setting up systems which enable information to be provided at the direction of the consumer. But just watch to see which companies, big companies, are the ones who are sticking their hand up to be data receivers, because that'll tell you something.
No, that is.
They'll be the ones who are saying, yep, there's big market opportunities in this for us,
yes,
and we want to be there quickly. So if the big, smart, forward-leaning, forward-thinking companies are out there sticking their hand up saying we want to be data recipients, that should send a message that there's value to be had.
And does comprehensive credit reporting play a part in any of this, or is that really largely for the purpose of responsible lending obligations and credit providers managing their portfolios?
Yeah, look, the history of credit reporting in this country has been one that's been driven by industry to ensure that they have a way of, a way of verifying information on behalf of the people they're lending to, and it emerged, and there were consumer issues that arose that needed regulators to step in. I don't think the regulatory task is completely done yet. I think that we may need to look at a bunch of stuff that was done in the last 2 parliaments in this area. We'll take a calm view, a calm look at the results of that.
It's certainly taken a very long time to get up and running, given it was intended to really be an adjunct to the introduction of responsible lending provisions in 2011.
That's right. Look, there's a job of work to be looked at there. I might just leave it at that at this point in time.
No. Well, Minister Jones, thank you very much for your time today and your insight, and I'm sure the audience will be very appreciative of it when they see it.
Great to have you, Yak, and I wish you all the best for the conference.
Thank you.
Cheers.